The local currency has dipped slightly this morning. However, its underlying strength remained intact on a short-term basis after strengthening 2.4% against the dollar since the beginning of September. Now, this is to trade at a highest level since June 25. The rand has dipped ahead of the U.S. consumer inflation data that could determine its next level. Independent analyst Jimmy Moyaha joining us now to talk us through some of these developments, in particular in the business world. Jimmy, good morning to you. Take us through how the local exchange opened after ending firmer but cautious amid economic recovery delays, as well as those other factors that are affecting the rand.
Good morning, Chloe. The markets definitely opened a little weaker this morning. We saw that the mining stocks are all down. This morning we've got about Amplats is down about 4.5%. Bidvest is up about 2%, but you've also got Sibanye down 2%. You've got Impala down 3%. We've also got Richmond trading down 3% in early morning trade. I think the caution that the market is applying at the moment is definitely around what could be happening around global demand. Global restarting of the economy. We know that China later this week is planning to release some results and some economic data, and that's definitely going to have some effect not only on that but also on the oil prices that we've been keeping an eye on. Yeah,
let's talk commodities. Oil prices extending gains, hovering near a 6-week high. Talk us through those developments.
Certainly. So the oil markets have been affected by a couple of global events. We know Hurricane Ida has affected the production coming out of the Gulf of Mexico. As I mentioned, the China import quota numbers are coming out later this week. Those numbers are going to be a very big indicator of China's demand or potential future demand of oil. And that's off the back of last week's sell-off of oil inventories to their local refineries. So that's going to be something to watch. I mean, we do know, of course, China is still the second largest consumer of oil in the world, and they're one of the largest oil importing nations in the world as well. So at the moment we should expect OPEC to keep an eye on those demand levels. And we know, of course, to sort of keep the price in check and avoid the crash that we saw last year.
Yeah, let's talk company news, Jimmy. Net1 Technologies, I think this is the company that made headlines some time ago over the social security issues. It basically reported its fourth quarter and year-on-year results. Talk us through how this group's performance was.
Sure. So, I mean, they reported some really good numbers as well. They reported about $23 million fair valuation of one of their business units. They said that they've got no debt and they've got about $200 million in unrestricted cash. They've also outlined that revenue figures for Q4 were about 20% higher than revenue figures for Q3. So at the moment they reported a $13 million loss in the Q4 operating loss. But of course, I mean, with unrestricted cash of about, as I said, just under 200 million, they should be able to weather any end-of-year losses, year reporting they might have to do. It shouldn't prevent them from paying out any dividends. As we said, they did their value of their business units up by about another $23 million. So, I mean, they reported some really good numbers from a production perspective as well. Their gross operating loss as well, that's improved by about 3% quarter-on-quarter and year-on-year. So if we look at that change in terms of rand change, it does have a significant effect. It's about a 40 change in rand, but that's because the exchange rate is the factor there more than is the production, the results from.
All right, Jimmy.